Monday was another crazy day in the stock market. The whole world woke up on Monday and be like, "Siao ah!" and started going down towards the news outlets called a 2008 style free fall. Meanwhile, the S&P 500 was trading like a penny stock yesterday. When the market initially opened, the S&P 500 was down by over 4%. But then a rumor broke out that Trump was going to consider a 90-day pause in tariffs for all countries except China. And almost immediately, the S&P 500 shot up by over 8% in a matter of few minutes before the White House denied the rumor, which caused the market to go back down by over 5% and started trading sideways from there. And I'm pretty sure all the people trying to time the market be like, "Heng ah, luckily this is all just fake news. Otherwise, I would be missing the boat." Because if this did turn out to be true, many of us would have missed out on a fantastic opportunity to buy stocks at a huge discount. So fortunately or unfortunately, the trade war is still on and things are still not looking so great now. First, after China announced that they will retaliate by imposing 34% tariffs back on US goods, Trump threatened to retaliate the retaliation by imposing an additional 50% tariff on China. If that were to come true, the total tariffs on Chinese goods would end up reaching a combined 104%, to which China responded by saying that they would fight to the end. Meanwhile, the US rejected Vietnam's zero tariff offer, saying that even if they lowered the tariffs to zero, they would still be running about $120 billion trade deficit with them. That's because Vietnam consistently rebrands Chinese exports as their own products before shipping them to the US. This is on top of other things like utilizing export subsidies, currency manipulation, and fake standards, which they felt were harmful for the US manufacturing industry. Then over at EU, Trump is now also demanding financial reparations for all the harm that they have done in the past. Thankfully, not everything is looking so bleak. For example, the EU decides not to retaliate yet and is now offering a 0 for 0 deal to the US. More than 70 countries have approached the US to ask for negotiations, and the US expects this process to take place over the next several months. So, where will the market go from here? That was a trick question, because I have no idea either. And anyone who tells you they know for certain where the market will go from here is either lying or he or she is a billionaire by now. However, here are some interesting statistics. Historically, there were only 3 instances where the S&P 500 first fell by 4% over 2 straight days, then down again for the 3rd day. And each time it happened, the S&P 500 had a very good chance of ending up in the green 1 day, 2 days, 3 days, all the way to 3 weeks later. The only time it saw a red was 4 days later. But even so, the drop is quite tiny in comparison. To add on to that, the S&P 500 is currently also quite oversold. Historically, whenever that happens, it usually means that there will be a rebound. For example, this happened in 2022, 2020, and 2019. Likewise, if you look back in history, whenever the S&P 500 falls below 20 RSI, it means it's already oversold. And there's usually around 2/3 chance of it ending up in the green 1 week to 6 months later. And after 1 year, it has almost 80% chance of ending up in the green. Then, if you look at an even longer time horizon, whenever the S&P 500 had a 20% drawdown, after 1 year, it was already up 8 out of 12 times. After 3 years, 10 out of 12 times. And the longer your time horizon go, the odds keep getting better from there. Quick pause. If you are looking for the cheapest broker to start your investing journey, check out Interactive Brokers. It has the lowest fees for stocks, ETFs, options, and more. Not just that, Interactive Brokers lets you easily research stocks. Like, you want to check out companies' financials? Here it is. You want to check out analyst ratings? Here's a bunch of them. It even has free technical insights which tells you where the stock might possibly go next. So sign up to Interactive Brokers today, and let's get back to the video. Now, just to be clear, I'm not saying the S&P 500 will confirm plus chop rocket up from here and everyone sings hallelujah, because there's absolutely no way to predict where the market will go in the short term. For all we know, you could start seeing red from here. All I'm saying is that the odds of the market seeing green after this huge drop is pretty good. Unless, Jim Cramer decides to jinx it. However, while I remain optimistic over the long term, I do feel that there's still a good chance that this trade war could continue to worsen in the short term, because Trump is determined to address the trade deficit issue, even if it means crashing the stock market in the process. as he's okay with creating short-term pain to achieve long-term gain. However, a growing number of Trump's early supporters are beginning to speak out as concerns over the direction of US trade policy. For example, Elon Musk has said that he wants zero tariffs between the US and Europe, advocating for free trade instead of escalating protectionism. Ted Cruz also warns that if this continues, it could tip the US into a recession, which will lead to a Republican bloodbath in the 2026 midterm. Even Bill Ackman, who was one of Trump's staunch supporters, is also sounding the alarm, where he warned that the US may be heading into a self-inflicted economic nuclear winter. Meanwhile, the markets is starting to reflect these concerns. Goldman Sachs has raised the odds of the US entering into a recession to 45%, while JP Morgan has put it even higher at 60%. So in the short term, things are certainly not looking too good now. However, here's where you need to be careful. While analysts can give all kinds of warnings they want, most of the time, their predictions are wrong. Just look back at the end of 2024. Practically every analyst forecasted that the S&P 500 would go up by around 10 to 18%. But fast forward to today, if the market never crashed by 30%, we would already armchair liao lo. Then, if you look at an even longer time horizon, their predictions are usually so off the mark that you often wonder how they can even keep their jobs. That being said, it's usually times like this when it feels like things are about to get even worse and the world seems like it's on the brink. That's when the market typically starts to bottom out. For example, back in 2020, when the world went into a shutdown due to the pandemic, here were some of the scary headlines. Stocks closed in the red despite Fed's rescue efforts. This recession might be worse than 2009. The Fed is throwing everything at financial markets, and if they aren't successful, this will exacerbate what is already a desperate economic situation. But guess what? That day, when all this scary news came out, that's when the S&P 500 bottomed and started to rally back up. Then in 2008-2009, when banks were closing after one another and people were losing their homes, here were some of the scary headlines on March 9, 2009, when the market bottomed. World faces first global recession since World War II. US unemployment rate jumps to 8.1%. While analysts were saying that it's probably still too early to bottom fish in equities, we should continue to wait and see where we will close this week. And it would be a bad idea to remain open to buying. But again, the market defied all odds and rallied up from there. Similarly, if you look back at all the past market crashes, there's always been something to worry about. And each time you will have people coming out to say that this time is different. So have you seen the bottom yet? Who knows? I don't really care about buying the bottom because let's be real, no one can time that perfectly. What matters more to me is whether I'm able to buy my stocks at a huge discount or not. But then here's a question. If I buy my stocks now and things progressively get worse and the world enters into a recession or worse, a stagflation, wouldn't that be bad for my stocks? I think that's a very valid question. So let's look at what happened to Google in the past. During the 2008-2009 recession, Google's revenue growth declined sharply and went from 42% all the way down to 3%. Naturally, the stock dropped by over 60% during this period. However, if you look at their fundamentals, Google not only managed to keep their operating margin stable, but it also grew during these 2 years. This was because they were able to cut costs and lower their expenses. Sure, their earnings per share took a hit in the fourth quarter 2008, but it wasn't due to a decline in the core business profitability. Instead, it was because of an impairment charge from the company's investments in AOL and Clearwire. After that, despite the economy still being in a recession, their earnings per share kept climbing, and naturally, the stock followed suit and rallied from there. Today, Google's business is even more diversified than ever. Besides the ads business, there's also Google Cloud, subscriptions, platforms, and other bets, which can help in maintaining their revenue growth and reduce reliance on advertising, especially during times like this. But what about other companies like maybe Meta? Now, it's true that their revenue still relies heavily on advertising, and their ad revenue growth did take a hit in 2022. But tough times don't last forever, and Meta's balance sheet is strong enough to help them weather this storm. And once they got past that, Meta has continued and will continue to grow, especially when social media advertising is riding on a circular growth trend. This is the same for many of the other companies that I'm buying now, whether it's Nvidia, S&P Global, Microsoft, and so on. While I can't predict where the market will be in the short term, what I do know is that I'm buying these high quality companies at a good price. These are companies that have strong balance sheets to help them weather uncertainties like the one we are facing right now. They have a wide moat to ensure they continue their dominance, and they have profitable business models that will fuel their growth over the next 10 to 20 years, no matter what uncertainties or government policies that may come their way. Anyway, that's all for this video. Hope you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.